Hey, founders, you want to get more for your business when you sell? Of course you do. So look, a couple of things that are not magical, but they are going to matter. All right. So you're going to sell your business at a multiple of either your recurring revenue, if it's that kind of business. So think of software or other businesses where there are annual contracts, or the persistency of revenue is an indication of the forward motion in your business, and that's the easiest way to track growth. More likely, for most mature businesses, it's going to be a multiple of what's called EBITDA. Think of that for this purpose as your transferable economics. The simplest and easiest way to get a higher multiple for your business is, compared to your competitors, is your EBITDA margin. In other words, your net profit higher or lower. If it's around industry averages, you're going to get the industry average multiple. On the other hand, if your growth rate and your profit margin are higher than a competitor that's got the same amount of revenue, you're going to sell for a multiple of your EBITDA. So you're going to sell for more than your competitor, regardless of whether they've got higher revenue than you. In fact, it could be the sort of thing that a 20 million of revenue business that only generates $500,000 of EBITDA or $1.5 million of EBITDA will sell for a fraction of a $10 million revenue business that's got $3.5 million of EBITDA. So look, build for profitability, build for persistency, build for growth. Then beyond that, look, your buyer, especially if they're a strategic or a really, really active private equity buyer, is going to look at key performance indicators. They're going to have a viewpoint about which things, whether it's, the margin, as we were talking about with EBITDA, or it's some other factor, average revenue per customer, average profitability per contract. There are sector-specific key performance indicators that buyers are going to look at. And to the extent that you can, you want to have a sense of what the averages are for the business and not go to market if you're below average unless you have to, and position yourself so that your confidential information memorandum indicates where you're outperforming your competitors. Those things will minimally ensure confidence in your buyer. They will confirm their expectations about the business, but more possibly, they can generate, a higher sale price for you, because you can make the case that you're better than your competitors. And quite frankly, it is for private equity firms and strategic buyers all about getting as much of transferable economics and potential growth down the road as they possibly can for the dollars they pay you. So what you want to have happen is it has to seem like, yeah, sure, maybe they're paying a little bit more than average, they're overpaying by a bit right now, but there's so much blue ocean in front of you. There's so much profitability. You're so much more efficiently and professionally run than your competitors that overpaying will be no big deal down the road when they sell for a lot more money. And if you roll over equity, you get a second bite of the apple and everybody makes a lot more money. So more to come. Stay tuned.